Alright, so while I was on vacation, the news broke of VW's several billion-dollar investment in Rivian. And so I didn't get a chance to make a video on it immediately after that news came out. But I've had a chance to digest these developments and understand what it could mean for Rivian stock investors. So in this video, I'll dig a little deeper and try and explain what this could mean for Rivian, whether this means that investors should now buy Rivian stock, or if investors should sell Rivian stock, and what are the specific strategic implications for Rivian's business. I'll share all those details with you in this video, so let's get into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, starting with the news. So VW said it would invest $2 billion in the creation of a jointly owned software company that uses Rivian's vehicle technology as the foundation for programs that will go into both automakers' future vehicles in the latter half of the decade. Additionally, the German automaker said it'll plan to purchase a $3 billion stake in Rivian over a few years, including the initial $1 billion injection. Let's take these one at a time. First, the creation of a jointly owned software company. In other words, there's going to be a new company created that both VW and Rivian will own, and the foundation of that new company will be Rivian's software. And VW will get access to Rivian's software. So this is another way for VW to access and benefit from Rivian's software without completely purchasing Rivian entirely. Rivian gives up access to its technology in exchange for the cash infusion, because Rivian desperately needs cash. So this is a cash infusion for Rivian. In exchange, it's giving up some of its developments in software, which have proven to be industry leading, one of the best in the industry. So VW gets, for its price it's paying, it gets back some software in exchange. Now, as to the automaker investing $3 billion into Rivian over a few years after the $1 billion injection, this provides VW some upside for investing in Rivian. VW, much bigger company, and its balance sheet much stronger. It knows that it can invest in Rivian and reduce one of the biggest risks in investing in Rivian stock, and that is cash. Rivian, if given enough time and enough cash, can grow to be self-sustaining. It can expand manufacturing, reduce the cost per unit, and therefore become self-sustaining over a longer period of time. The big risk was, could Rivian get there, or will it run out of cash before it has the ability to expand scale large enough to be self-sustaining? Already, Rivian has gone through over $10 billion in cash just to get itself to the point where it's producing right now 57,000 units per year. That's what's expected this year. That's what it delivered last year. So it had at one point a cash balance of $18 billion. It now, before this update, had $7.8 billion. So it had gone through over $10 billion from January of 2022 to about March of 2024 in a little over 2 years. So it was burning through roughly $5 billion in cash annually, or investing in the business to grow it to its current form. Now, those cash flows had not been improving by very much. You can see Rivian over the last 5 quarters, negative $1.8 billion in free cash flow, negative $1.6 billion in free cash flow, negative $1.06 billion in free cash flow, negative $1.4 billion, negative $1.5 billion, and you get the point. Every quarter going through more than $1 billion in cash just to sustain the business, just to keep it where it is, because there hasn't been any growth year over year between last year and this year. Rivian produced 57,000 vehicles last year. Rivian will produce 57,000 vehicles this year, close to zero growth. and it's probably going to come at lower prices as well. So Rivian, if it kept on this path, you can see this is not sustainable, right? It can't keep going, burning through over $1 billion every quarter. So it needed a cash infusion. It needed a way to lower the cost, and this does both, which brings me to my next point. So the next point is this. Rivian's CEO saying that the capital is only one portion of the value for us. Spreading the cost of Rivian's software over a larger fleet of vehicles through the VW tie-up would lower parts cost for Rivian as well. So remember how I said they're forming a new venture where they're going to use the software that Rivian will provide? But what this will do is Rivian will be able to sell that software through the joint venture to VW. So that joint venture will sell to Rivian and it will sell to VW. And so that joint venture, the software investment, instead of Rivian spending all that money on software just for itself, it's only making 50,000 vehicles per year. VW is in the multiple millions of vehicles per year. So now it takes that software spending out from just for Rivian into the tie-up, and then it can sell that software investment, that software progress to VW's larger fleet. And so the cost per unit that Rivian will spend on software will decrease. And that will play a big role in bringing the company's costs down and thereby extending its survivability, bringing up the probability that it will get to a point where it can expand manufacturing and create more units to a level where it can be self-sustaining, because at 57,000 units, there's very little chance that the company can generate profitability or even be free cash flow neutral at 57,000 units. It needs to get up closer to 200,000 units, which it can do at its current facility in Normal, Illinois. It can get up to 215,000 units. So as it approaches those levels, the company can become more self-sustaining. And then at that point, as it becomes more self-sustaining, it can think about expanding. Remember, it paused production of its Georgia facility. So it could think about expanding into the Georgia facility, which will add closer to 1 million units. And at that point, it can be a cash flow positive business. So two things this investment does for Rivian. Brings in cash desperately needed, right? The company's burning through billions of dollars every year. And so it needed that cash, but it then also lowers the cost of software that goes into each vehicle. The cost per unit of software investment per vehicle is now lower, which increases the pace at which the company can get to profitability. That being said, the stock price responded to the news. It's up significantly. Rivian is now trading at a forward price to sales of 2.18. And so I've had Rivian stock rated as a hold all year long. I told investors this stock is not a buy. Too much loss on the bottom line, too much uncertainty, too much risk, consumer behavior not attracted to electric vehicles, especially in the US, as much as these companies were hoping for. And so I've told investors this was not an attractive investment. And even after this good news for Rivian stock investors, I still don't think the stock is a buy. Even after the good news, it was a big step in the right direction for Rivian, but not yet enough to convince me that this stock is one that's going to deliver a good return on investment for investors. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe.